Ladies and gentlemen, welcome to Kohler Group's expansion into China webinar series. This is the last part of our 10 webinar sessions. The title of today's presentation is Deadlines for Annual Compliance and Audit in China. First of all, a short introduction of our topic today. Subsidiaries of foreign invested enterprises, joint ventures, and representative offices are all required to complete monthly and annual financial management reports. In addition, year-end financial audits must occur. In this webinar, we will be highlighting the various deadlines for the annual inspection processes and year-end financial management report audits. In addition, we will be providing tips on choosing the right auditors in China. I'm very pleased to have our director at Kohler Group, Mrs. Cristina Kohler-Coluccia, as our speaker today. Before we begin today's presentation, allow me to settle some administrative matters. I would like to make sure that the sound system is working perfectly. If you could hear the introduction and you can hear me clearly, please click the hand button in the control panel, which will give me the signal that we have no technical issues. If you're using a computer, mic, and speaker system and you have trouble listening, please note that there's the option to dial in via the telephone by simply clicking this in the audio section of the control panel. Please note that we're recording today's webinar session, and the presentation, together with the recording, will be distributed to the registrants by the end of the day. Ladies and gentlemen, as we do in all our webinar sessions, we do encourage all attendees to submit their questions as well as comments into the question section of the control panel. The presentation today will last approximately 45 minutes, after which we aim to have a Q&A. Please don't be shy in inserting your questions or sharing experiences. I will now pass the microphone to Cristina, who will introduce Kohler Group and herself, and will then begin with today's presentation.
Thank you, Barbara. For those of you that are new to Kohler Group and Kohler Group's webinar series, allow me to just introduce ourselves. Kohler Group, a CSC company, provides a wide range of market entry consulting, incorporation, tax accounting, and HR services to companies that are looking to enter the Asian region, primarily in Hong Kong, Singapore, and in China. The firm was established in 1979 and has just over 120 professionals located throughout its 10 offices. Our main objective is to tailor-make solutions for companies that are looking to either come into the region or expand within the region, and in some instances even liquidate and exit the region. One of our unique advantages is that we do speak just over 10 languages internally and are able to communicate with our clients in their mother tongue. A little bit about myself. My name is Cristina Kohler-Coluccia. I'm a director at Kohler Group, and I will be the speaker for today's presentation. I've been with the company since 2003 when I opened our first Shanghai office, and since then have grown our China operations to having 8 offices and just over 60 professionals. I've been assisting foreign investors with their market entry, their expansion, and their liquidation from the Chinese market. I'm also co-author of our monthly magazine entitled ChinaInvest.biz, which if you're interested in subscribing to, can easily be done so on our homepage. So without further ado, let's begin with today's agenda. I've outlined in the agenda the step-by-step procedures, and we'll be going through each of these steps in regards to the annual compliance and audits that need to occur for any type of entity that exists in China. If you've been joining our previous webinar sessions, then you are familiar with the terms of representative office or limited liability company. And both of these types of companies, regardless of who the shareholders are, regardless of the date of establishment, they all have to go through annual corporate compliance and audit compliance procedures. So let's begin. Now, one important aspect that one needs to consider is that the financial year or the fiscal year of a company in China is from January 1st to December 31st. The change of the fiscal year can be done, but usually this is done for multinational companies that have numerous subsidiaries in China and are required to change the reporting for the head office. If you are a small SME that is based in China, it's very with only one subsidiary, it's very unlikely that you will be able to change the fiscal year. As such, when we're going through this presentation, you have to always consider the calendar year and when things have to be completed. Now, for the purposes of this presentation, let's think of the calendar year 2015, which would then be the fiscal year 2015, and let's relate it now to what needs to be done step by step. The first step that needs to be completed is the year-end financial management reports, and this entails for both a representative office as well as a limited company. And when I say a limited liability company, let me clarify. This is if it's a foreign invested company, whether you're a WFI, a FICE, it's for a joint venture, it's for a partnership, any type of entity, even domestically owned companies have to go through these procedures. So the first step, really, starting from January 1st of 2016, is looking to complete your year-end financial management reports as soon as possible. And the key dilemma here that a lot of companies don't realize is that the fourth quarter tax filings are due no later than January 15th, which means the tax declarations have to be done at that time for the period of quarter four, which is from October to December. So the year-end financial management reports need to be approved. The taxes for the fourth quarter need to be declared by the 15th of January. At that point, any adjustments which need to be made within the year-end financial management reports should be done after that date. And why do I say that? It's because of Chinese New Year. You're always going to have a period of 10 to 15 working days where nothing happens in China for Chinese New Year. And that period obviously changes year on year, but generally it's from mid-January all the way to mid-February, if not end of February. So you need to know when this Chinese New Year period is. The annual audit requirement has to occur once the year-end financial management reports are approved and if any adjustments have to be made. The auditors will then start the audit procedure. And they will produce two types of reports. One is the financial audit report and the other is the foreign exchange audit report. Now I've put a deadline here of when those reports have to be submitted. In theory, the reports only have to be submitted together with the profits tax filing declaration by April 30th. So you do have time, but it's always good to start in advance because it really comes down to which auditor you're working with that will do the work thoroughly. Now the biggest question that I get from clients is, how do I choose my auditor? Who's going to do my audit for me? And I always answer back in saying, well, what is important to you in terms of the audits? One, is it important to be able to communicate with your auditor? Two, is budget and cost a big issue? And three, how important is accuracy and reliability, which you may laugh off because accuracy and reliability are always important in an audit, but that really comes down to the auditor and whether they use Western methods to complete the audit or whether they're doing it the Chinese way. So communicating with the auditor is obviously of greatest importance. If you are a CFO sitting in your overseas company, you may want to be able to speak directly with the auditor if there are questions that you have regarding your audit. You may not want to have this intermediary person, whether it's your in-house accountant or your outsourced provider, doing all the communication. In that case, English would be a main priority. You then have to look at budget and cost. So most local CPA firms, they base the cost of an audit on the assets that the company has, the registered capital, and the turnover. But if you look at most foreign invested audit firms, like the Big Four, or BDO, or Mazars, Grant Thornton, they're going to look more closely, and they're also going to base their budget and their cost on the added value that they're going to be offering to you, because in the majority of cases they're going to be doing the audit process in a Western style, where really they're going to cross-check the data from left to right, from up and down, etc., to really show accuracy and reliability of the financial statements. So choosing the right auditor is not an easy task in China, but it is something that it's up to you sitting in the HQ to decide who you would like to work with. Now, on average, an audit can take between 5 to 15 working days depending on the quantity of transactions that have been running through the company. So again, it's important to schedule the audit with the auditors in advance because they will have their own scheduling that they need to follow with other clients. You'll need to calculate the Chinese New Year holidays into this, and then the deadlines as well. So you may have internal deadlines within your company, but you also have to follow the annual compliance deadlines in China as well. Normally, we would recommend to our clients to book the audits, if not already at the end of November of the previous year, latest prior to the Christmas holidays. Now, by March 31st of every year, all employees earning a salary of more than 120,000 renminbi in a year must submit an annual income tax declaration. So the question is, who's responsible for completing that tax declaration? Because in general, in China, as you may already know, monthly tax filings are required on personal income. So the question then always arises for this annual tax declaration, since the company is doing the monthly tax declarations automatically, who does the annual? Well, in reality, even the monthly tax declarations as well as the annual tax declarations, the responsibility befalls the employee, not the employer. The employer is actually doing you a favor by just doing it automatically on your behalf on a month-to-month basis and making sure that there's no liability that befalls him. The reason behind doing this annual tax declaration is to see whether any individuals earning more than 120,000 renminbi are also earning income in other areas besides their salaries. So potentially they bought property in China. They're getting monthly rental income from that. They need to declare it in this annual tax declaration form. If they are an individual shareholder in a company in China and they're receiving dividends, they need to declare those dividends in this annual individual income tax declaration form, and the list goes on. So it is actually the responsibility of the individual to declare honestly any other income they're earning outside of their monthly salary. And it is their responsibility to handle the declaration because most of the time they don't want the company to know what they're doing as side business or what they own on a personal level, etc. But of course they can outsource that to a corporate service provider who can handle then these annual tax declarations on their behalf. It's important not to miss the deadlines. If you do miss the deadlines, then your name could potentially be blacklisted. If you're late on the deadline, then the key is to ask for an extension as soon as you know you're going to be late in order to not incur any types of penalties. Now, annual profits tax filing or annual profits tax declaration needs to occur for an LLC as well as a representative office. And the annual profits tax declaration, the figures and calculations are obviously going to be based on the year-end audit report, which is why it is so important to make sure the audits are done in advance. The deadline for the annual profits tax declaration is April 30th. Extensions can be applied for, but they need to be applied for in advance. And it is very important to make sure that you don't miss any of these deadlines, otherwise the tax bureaus and the tax officers will be hunting you down and calling you on a daily basis until you do submit the necessary forms. Now, we've looked at it from a financial perspective. So obviously, when you look at it step by step, in January, your focus is doing the fourth quarter reports, doing the tax declarations for the fourth quarter, beginning the annual audit, finalizing the year-end management reports, and then beginning the audits. And then you have these individual income tax annual filings and the annual profits tax filings. In relation to corporate compliance, there are certain procedures that need to occur as well, whether you are a limited company or whether you're a representative office. This occurs once everything from a financial perspective is completed. So the deadline for the annual inspections is June 30th. And what's the purpose behind it? The purpose behind these annual inspections is for the Chinese government to obtain statistical data about the success of your company. They use that information, quantity of employees or general head count of employees, transactions that have been running through the company, and they use that data to create their annual statistics on success that China has done by all the companies that are based in China. So it's basically a statistical analysis that's being conducted. For limited companies, it's a series of documentation that can be filed either online, depending on the city that you're registered in, or in hard copy on a series of A3 documents, which then have to be filed directly with the various government bureaus that this needs to be filed with. The advantage of the online application is that it's just one submission, you click the button, and it gets automatically distributed amongst the various bureaus. In other cities where you have to do the hard copy filings, you actually have to physically submit this at the various bureaus. With the representative office, it's slightly different. Here, the Chinese government wants to make sure that the parent company of the representative office is still valid and is still up to date. So they do require that the parent company's documents are re-notarized, and they ask for this on an annual basis, to make sure that that company is in good standing. Because in the past, many companies would set up Hong Kong holdings that were 2 years old and would then register through these companies, but they would never maintain those companies, those Hong Kong holdings. They would never renew the business licenses, they would never do the accounts, the audits, etc. So for the Chinese government to make sure that that parent company is truly active and is in good standing, they do ask you to notarize the parent company's documents. And all of these documents need to be submitted to the Administration of Industry and Commerce as well as the MOFCOM. And the date for both limited liability companies and representative offices is the 30th of June. Now, one of the dilemmas with representative offices is that the Chinese government also wants to verify today whether these representative offices are operational and active, because in the past, many foreign individuals would set up representative offices only to be able to get work permits and residence visas and be able to reside long-term in China. So, surprise visits are conducted at the RO's premises, i.e. the registered office address, usually in June, July, in order to verify that they are actually operational. Now, if you are delayed with submitting these documents or doing the online filings for the annual inspection, then your name will be automatically blacklisted with the Administration of Industry and Commerce as well as with the MOFCOM. If you cannot complete these documents at the scheduled date, then again, extensions need to be applied for. And it's important to note that extensions should be done usually 2 weeks in advance. Now, if there is a surprise visit at your office, there's no cause for alarm. Basically, you might get 1 or 2 government officers knocking on your door or ringing your office doorbell. They, in reality, should be showing you their identification that they are actually working for the Administration of Industry and Commerce. If they don't show you any type of identification, do not believe who they are. It's just like in the Western world, if you have a police officer in a uniform stepping at your door, he should be showing evidence that he is a true police officer and not that you are revealing information to a layman. If he is who he says he is and there's 1 or 2 people, you invite them to the conference room, they will ask to see a series of documents. Have you been updating everything? Is everything in compliance? And if you can show all of this in originals, then they will leave. If you cannot show all of these, primarily because you've outsourced these services to a provider, then all you have to do is say, here are the contact details of our outsourced provider. You can obtain all information from them, or alternatively, let's reschedule an appointment and we can give you all the originals. So again, there's no need to be alarmed, no need to be scared, particularly if you've done everything in compliance. If obviously you haven't done things in compliance, then in worst case scenarios, these government officers could ask for additional people to come to your office and confiscate computers, confiscate folders, to really verify what you're doing in that office. And that's obviously something that anybody would want to avoid. Business license renewals and registration certificate renewals. Now the business license renewals for a limited company need to be done on an annual basis, but it's not a complicated procedure. You just need to show the original, get a CHOP that a government officer has seen the original, and it's done. For a representative office, the registration certificate renewal is something that doesn't necessarily have to be done on an annual basis. It depends on the term of validity of your representative office, which in most cities is on average 3 years. In some other cities, it can be up to 5 years. In general, you should be able to do the rep office inspection and the rep office renewal at the same time, but it depends on the date of establishment of your representative office. So it could be a second procedure you need to do outside of the representative office inspections. Similar to a rep office inspection, you would need to get all the documents of the parent company notarized and then go through the renewal procedure, and then the validity term would again be 3 to 5 years. Now for a limited company, the term of validity at a minimum is between 10 and 15 years, depending on what you have chosen as a term of validity. As such, you should always remember that at least 6 months prior to the date of termination of your limited company, you need to also go through a business license renewal. And we say start 6 months in advance because usually the application does take 6 months. Now, once all of this tax compliance, audit compliance, corporate compliance work has been completed, it's usually by July 1st, once you've gotten the approval from everyone, that you can begin the process of dividend repatriation. And obviously, dividend repatriation is only applicable to those companies that have been profitable and that want to repatriate their dividends to their head office or to the shareholding company or to the shareholders individually. So usually it's around July 1st where this procedure can occur. In addition to that, in China, dividend repatriation can only occur once a year. The application process usually takes about 6 weeks to complete until a transfer can actually be done from your bank to the shareholders themselves or to the shareholder corporate entity. For the tax bureaus and for the State Administration of Foreign Exchange, you will need to probably convert the capital from renminbi into US dollar or euro to make the transfers. And for the tax bureau, their main objective is to make sure that all taxes have been declared, and they'll want to go through your audit. They'll also want to go through your financial management reports to see what what success you've actually achieved, and also taxes do need to be declared. So a withholding tax on dividends will have to be paid. If there's a double taxation agreement between the shareholding jurisdiction and China, then usually the rate is at 5%. If not, it would be at 10%, and if there is no double taxation agreement, then the rate would be at 20%. Now the last slide for today, it's a very quick webinar session, is your checklist for the fiscal year 2015. And basically I've highlighted here what you need to do step by step. So the first step is really looking at the year-end management reports and profits, calculating the Chinese New Year holidays into your whole scheme, which obviously is now over. It's beginning the annual audit, unless if you are a large organization, you may have had an audit deadline already in January, which means prior to the Chinese New Year holiday. You'll have to do the annual individual income tax filing by March 31st, the annual profits tax filing by April 30th, and then before you start the corporate compliance procedures, what we've noticed in the majority of cities in China is that you will need to update the business license to the 3-in-1 license, which is something that's new for this year, and if you do it this year, then you don't ever have to do it again. The conversion of the business license into the 3-in-1 is basically that there is now a unified code system to identify a company that is utilized by the Administration of Industry and Commerce and MOFCOM, by the Public Security Bureau, which issues the Enterprise Code Certificate, and the Tax Bureau. So all three bureaus now are working with one code per company so that they can actually share information much easier. And it requires you to update your business license so that this code is mentioned on it. It will also mean you no longer need an Enterprise Code Certificate and you no longer need a tax certificate. In addition to that, you'll have to do the annual inspections by June 30th, which encompasses also the business license renewal and potentially rep office renewal depending if you are at the end of your validity. Obviously, if you're profitable, it's at that point you then do the dividend repatriation. So all of these procedures that you see here on this slide are actually handled from January 1st to approximately mid-August or end of August 2016 for the fiscal year 2015. That's the end of my presentation today. Barbara?
Thank you very much so far, Christina. As I can see so far, we didn't have any questions today. So we hope everything is clear so far. In case there are any questions occurring after the webinar or you want to talk about your individual cases, feel free to contact Christina privately after the webinar. Here on this slide you can see her contact details. You will be receiving a copy of this presentation together with Christina's contact information. We hope that you enjoyed this last webinar session. The recording of this webinar and all other webinar sessions are and will be posted on our YouTube channel and distributed on our social media sites such as LinkedIn, Sing, and Twitter. The link to our YouTube channel you can see on this slide. In addition, if you're interested in our weekly e-campaign highlighting all the latest resources we publish, do not hesitate to subscribe. It is free of charge and can be easily done on our homepage by inserting your email address into the section called chinainvest.biz. Thank you, Christina, for presenting today. Thank you also to all our presenters, and most importantly to the registrants and attendees for joining us today and in this webinar series. We look forward to seeing you again very soon. Have a pleasant evening and goodbye.